Hey everyone, this is the Trader Investor on another SPY trading day. Today I'm just going to ask you a question, and that is SPY testing your patience? What do I mean by that? Well, if you're hungry for trades, if you want to force trades, today is an ugly day. Today is an ugly day because it is not going to give you any opportunities on either long side or short side. It is not giving you an opportunity at all. Because for me, when I say opportunity, it just means, is it coming to an area of value where I can place a trade? An area of value is it coming to a demand zone? Is it coming to, even if you're not using this demand zone, is it coming to a strong support and resistance level? And recently, because we're making continuing this all-time high, pushing up further, there's nothing to the left for us to gauge where that support is. We have a lot of support, but for resistance, there's nothing, right? There's nothing for resistance, with the exception of the highs that was formed, on Tuesday or Monday. We had an inside day Tuesday, and then we are back right up to those highs again today. So when you're having this kind of a day and nothing on the left to look at, but for support, you have plenty to look at. But my preference usually is, again, I look at the monthly. What is the monthly doing? The monthly is in a strong uptrend. That weekly is in that same uptrend. That's what the weekly is doing. This is the uptrend that the weekly is following. So as long as we are in this uptrend, then I want to see price bouncing from top to bottom. When it's at the top, take profit. When it's at the bottom, exit. This is basically how I want to take a look at it. But again, for me, that area of value is way down here. Now, if it aligns, if there's confluence with many things being a demand zone and imbalance, trend line, some level of support that you might draw, if all of those come together and price gives you that opportunity somewhere in this vicinity, this is really a very beautiful area to enter. Because for two reasons, right? You wait for price to confirm, and you have a lot of upside potential because recent highs would be at least your target one. A lot of upside potential. But if price is only coming down here, by the time you get confirmation, your upside potential is very limited. Very, very limited. So this is why I like, some very strong pullbacks to enter. And that's why I said, is it testing your patience? Is it testing your patience? Are you waiting for price to come to you? Or are you just saying, hey, Tuesday is low, good enough for me, near this demand zone, good enough for me, I'm going to enter. That's not how I trade, so that's not what I will talk about. For me, what I focus on is my demand zones, my strong trend lines, some confluence. I look at all of that, and I also use Fibonacci. You see me use Fibonacci a lot. And so a good place for entry is somewhere between the 50% and the 61.8% retracement. Again, look at this confluence. If price comes down here, and we have many things that says price could come down here. We have higher highs, but oscillators, lower highs. Many of these things are coming together that is suggesting that price is going to come down here. And where is it going to potentially come? Where is the confluence area? 50%, 61.8% retracement, demand zone, imbalance, trend line. It can't be any more perfect than this. So you wait for price to come down here, be patient, wait for price to come down here, very limited risk, very, very limited risk. You risk this somewhere like this, and if your confirmation is here, so if I draw it, if your confirmation is somewhere here, this is what you risk to make this 2, 3 to 1. This is what you're looking for. This is exactly what you're looking for. You don't want this risk here to make this. This is 1 to 1 or less. This is not an interesting risk for me. And when you have a confluence area, when you have price working its way towards a divergence between oscillators and price, and this is my oscillator. You can use any oscillator, RSI, stochastic, MACD, and you'll get this similar result, meaning not the numbers, but you'll see the divergence. You will see price going this way and price doing this. So you'll see this divergence as price is moving up, oscillator going down. That tells you, hey, it's time to be cautious. So for me, this is a beautiful time. I'm just impatiently waiting for price to come here, but I'm not impatiently entering a trade. So that's why I said, is a SPY trading making you impatient? Is it testing your patience? Good. If it's testing your patience, is good. If you're entering a trade just because you're running out of patience, very bad. I highly, highly recommend you walk away when you get into that state of mind, because our goal is to be consistently profitable, not to be right on a trade by trade, or not to gamble. This is not a gamble. This is a business. You have to treat it as a business. So in this business, we're here to make money. There's no business that is here to lose money. Every business is here to be profitable. So the way to be profitable is wait for price to come to you. You don't go to the price, price comes to you. When price comes to you, you'll have very, very good success. Very good success. And again, what you're looking for is confluence between price, area of value, Fibonacci, and any other indicators that you want to use. I don't use indicators. And just like in this case, when price came back down, this was an okay entry. This was an okay entry, but here again, your risk is from here to here. It's an okay entry because for me, what I look at is this area of resistance. Price broke through it, but was not able to stay in this area for too long, and it broke above. So you can take a small risk to go up. Now, this is not the strongest entry. This is not the most beautiful entry because we have this imbalance. We have this gap here. So I'm very, very cautious about this gap. This entry for me is an entry where, at these highs, I'm exiting. At least a good portion of my position, I'm exiting at these highs. And, no entry for me this week. Because this week, I'm just letting price do what it wants to do. Instead of going for short gains and scalping, I don't want to scalp. I'm going to patiently wait. This was a good trade. This was a good trade, but I'm not seeing that kind of opportunity. And why would you say, you might ask, this is similar to this. Price went up, short pulled back, and didn't give you anything. And if you look at this overall pullback, two issues. It did not even come down to 23.6%. The reason why I wanted to come to at least that is because there's a good upside potential. You risk reward. If price comes to this level and it gives you an entry, and your reward would be somewhere here. And if it gives you a 1 to 2 ratio at least, you can take this trade. So similarly here, when price broke above this level, this was my entry. This is what I'm expecting price to do. Tight stop and go for this. Now this is not a 1-to-1 ratio. I broke my rule when I entered this trade. It happened to work out. I don't recommend doing anything like this. I broke my own rule because my entry here, this was my stop. And I knew this was target 1. So I'm not recommending that at all. I don't like to recommend that. And sometimes we get in trouble when we take this kind of risks. So it came down to 23%. I entered this trade. Bad trade, positive outcome, but bad trade. And so the best trades are when price comes down to the 50% retracement. This 50% retracement aligns with imbalance and demand zone. This was a perfect entry, but this was not a very solid entry. So that's why similarly here, not a solid entry. Again, even no support because it did not come down low enough. I like these deeper pullbacks. They at least help me give me some sense of target that I can shoot for, instead of trying to just blindly enter a trade. Just because we're at a demand zone, it does not mean a whole lot. And here, price tested these lows a couple of times, so that's why I took a chance here. But my recommendation is wait for price to give you a solid entry. So and one thing that I want to mention before I wrap up, on one of the comments somebody asked me, what do you mean by 1 hour demand zone? Because I always talk about these 1 hour demand zones. So the way I look at order block and demand zone, supply zone, is on a daily chart is the strongest, and then the lower time frame I go to, the lowest I'll go to for a demand zone or an order block is the hourly. So when I mark a 1 hour demand zone, I just wanted to make sure that you are aware that I drew this demand zone on the hourly chart, not on the daily chart. Just even if I mark an order block as an hourly order block, it just means I used the hourly chart to mark that order block, that supply zone, that demand zone. That's all that it means. There's no other significance to it. And I'll definitely do a video to clarify how I draw my demand zones on the hourly and on the daily chart. I'll do that in the next few days. All right, everyone, take care, and I'll see you in the next video.